Hi, my fellow YouTube subscribers, my students, my learners. Welcome to Teacher Parties YouTube channel. Please subscribe, share. It's free content. It's free but valuable content. It's the content you need to make you master accounting in matric. Guys, I wanted us to do cash flow, okay? But I wanted us to look at the way they assess it. So I want us to look at the cash flow from financing activities. So cash flow from financing activities, it's all the money. Remember, cash flow deals with money movement, guys. It is not accounting movements like in the statement of financial position, the statement of comprehensive income. Those guys, they have accounting movements which sometimes are not money related. For example, depreciation, write-offs, and all that. There is no money, but the entry is necessary for the alignment and the true reflection of the financial statements. But the cash flow, it only deals with the utilization of cash within the business, the cash inflows and the cash outflows. In your what is in your financial statement analysis here, the ratios, they talk about the term liquidity. So liquidity, you will need the cash flow to examine that. So meaning, does the company have enough cash to pay its employees? Does the company have enough cash for any operations or investments they need to embark on? And also, cash flow talks also to solvency. Is the company able to liquidate its assets, its short-term assets, to pay for its short-term debt? So those answers you're going to get in the cash flow statement. Okay, guys, so I've explained the cash flow from financing activities. So, okay, no, I didn't explain the cash flow from financing activities. I explained cash flow as a whole. Now, cash flow has three subsections. Which also we're going to do: cash flow from operating activities, cash flow from investment activities, cash flow from financing activities. And at the bottom there, it's us trying to balance to the opening to the closing balance of cash and cash equivalents in the statement of financial position. Now, the cash flow from financing activities. This portion, guys, it only deals with how capital, be it capital for investment activities or capital for operational activities, no matter what the capital was needed, this part deals with it. So it can be capital raised from further issuing of shares, or it can be the shares bought back from the public. That's still capital related. Or it can be that the business needs, it talks to your gearing, this part, your debt and equity. Ne? So it can be that the company opts not to use equity to raise capital, which is your shares. They are using debt, which is your loans, to raise capital. So this part, guys, it talks to the two: your long-term loan movement and your share capital movement on a cash basis, guys, not on an accounting technical basis. You're going to see that. Okay. I hope I made sense in this. I'm going to be uploading these notes on my website. You're going to be paying for them, but it's going to be a reasonable fee. Okay. So let's go and do the question that was asked. Hey? So this is November 2021. This is IEB. Guys, I did not develop this question paper. I do not own it. I'm not the examiner in the question paper. I am not. I am an accounting teacher that used a resource to explain a concept. So I'm not a representative of the IEB or the government yet, which I'd like to be, but I'm not any representative. So This question paper you can also access on the IEB website. You can access it easily. I just need to see if I'm not muted. Okay, you can access this on the IEB website. It's November 2021 question paper. It was written November 2021. You can access it, download it, and let's practice together. Now, you can do the easy way where people just download the question paper, look at the memo, and try to make sense out of it. Remember, that method doesn't work. Okay? If it really worked, we would not even need to attend school. That method doesn't work because as soon as you are done copying from the memo, you forget because you didn't apply. So the reason I'm taking you through the calculations, internalizing everything, is so that you can internalize and apply the concept so that if you get any question, you can tackle it. Okay. Let me close this. Okay, so question 3 is cash flow statements, 50 marks, 30 minutes. You can do that even less than that when you know what to do. And you have to do it very fast. Ne? Okay, so the important thing, ladies and gentlemen, I always say know your client and know the financial year. Ne? I've already copied those down for you. And if you see in the answer sheet here, they have given you how they expect you to answer this. It's 13 marks. So meaning in 5 minutes, you should be done with this portion. Cash flow from financing activities. Okay. So the first thing is the proceeds. Of shares issued. Now, what they've given you, for cash flow purposes, ladies and gentlemen, I must also highlight, they'll always give you comparative figures. This is for you to track the movement. Now, they've given you financial results, that is the balance sheet for 28 February 2020. They gave you a balance sheet for 28 February 2021. They've given you the shares they've opened with. They've given you the shares they've closed with. Now you need to know the shares they purchased. Guys, it doesn't get any better than this. You need to solve for X. You know me by now. X must find this missing link for us. Calculations. And it's method marks, guys, in accounting. So please show your calculations. X equals to, we know that at the end of the term, our shares were equal to 4 million. Ne? And when we opened the year, our shares were 3.6 million. So definitely there is an increase, which implies there was a share issue. Are you okay, guys? Okay. Now let's see if there is any story about buybacks. What shares? At the end of the year, the company bought 50,000 shares at 70,000. So that we don't even need to calculate. So we would have subtracted these shares when we're doing the calculation. So now we would have to add these shares. Guys. Scarcity, so yeah, much better. So let's just do shares repurchased. They've given us the figure. Now, if we're doing the statement, the note on the statement of financial position on ordinary share capital, we would have had to use the weighted average cost. In this case, we will have to use the actual money they used to repurchase the shares. Because why? We are tracking the cash movement. How much did we pay for those? This is the cash flow statement. This is the statement of financial position. The statement of financial position would have used the weighted average, where we have to divide the balances to get the weighted average, because we need to record this at book value. In the cash flow, we need to record this at cash value. So minus 70,000. Okay, I just needed to quickly put that in there now that they've given this to us. So X equals to, let's see, 4,950 minus 3.6 plus 50,000. So we have 1.4 million shares. So we have 1.4 million shares. They tell us during the year shares were issued at 120. So this is the cash we received. It's 120. Show your calculation, guys. So times, don't mind the noise, guys. It's my neighbors. So the value you have there, guys, is how much? 1680. Okay. So you need to show your calculations, which is this. Awesome. So let's highlight this. So show your calculation, guys. You'll be surprised that the greater part of the marks in the 13 comes straight from here. Oh, guys, I don't know why this thing doesn't want to come down. And me being a perfectionist now is getting the best of me. And do what I did. Oh, guys. Much better, because I don't want things floating in there. I'll just highlight It's not highlighting, but you get the drill. Maybe if I highlight this, it will be much better. No, guys, let's not waste time. You get the drill. So you'll have 1, 2, 3, 4. You'll have 4 marks in this. And you'll have 1 mark, 5 marks, 6 mark. Okay, now we are done with anything that has to do with equity. Now let's go to the repayment of the loan. Repayment on the capital portion of the loan is 15,000 per month. So we have paid 15,000 multiplied by 12 months, close bracket, minus it's 180. Show your calculation. So this is like 1, 2, 3, 4, 5, 6, 7, 8, 9. See, this is how we distribute marks. So yeah, if you don't show your method, you lose ample marks. Then they're saying there was an additional loan taken, but they don't give us the answer. So guys, solve for x. I'll just remove this. Okay, this is calculation number 1, guys. So x, they told you that the balance at the end of the period is 1.1. And they paid, to reach to that balance, they had to pay 180. And the opening balance is 930. Okay. So oh God, sorry guys. So 80 minus 30 is 350. Proceeds of a new loan. So guys, that's your cash flow from financing activities. Cash flow from financing activities. Please practice at home. Practice, practice, practice. Let's see if we, oh Lord. Let's see if we got this right. There we go. Goodbye, guys. Share, like, subscribe. Thank you.